Hello and welcome back to another episode of the Winnipeg Market Watch podcast. Folks, this actually is our official 2-year anniversary episode. This is the 24th ever installment of this series. Denzel, I wasn't sure if we were going to go for 2 years, but hopefully we go for two more because this has been a lot of fun.
Yeah, 100%.
Okay. Well, guys, as usual, we're going to start with market data from the previous month. And then, because it is the end of the year, Denzel and I are going to focus the back half of this episode talking about what we think is going to happen in Winnipeg real estate in 2026. But before we get to that, first, let's talk about the month over month here. The November data is out. And we had an interesting month for a lot of reasons. The first of which is pricing went down possibly the most that we have had all year. We lost 1.32%. However, the supply metrics and the liquidity seemed to be higher than they have been in quite a while. Now, talking about price more broadly, the benchmark price is still 433,800, which is far above where we were this time last year, where we were in the 410 to 415 range. But it's still not great to see a huge pricing drop. Again, going back to the absorption, this is where I really think the story is. We had an 83% sales to current ratio, which is the highest we've had since June. Denzel, how do you look at this data and see pricing fall, but uptake rise so dramatically as an investor?
Well, I look at it and I use past experience as, where to draw my answers from. And around this time of year last year, it was actually quite busy.
Yeah,
Uh, my partners and I, we had some property for sale and, they went extremely well. And Keenan, I know that you obviously been listing a ton, both in November and in December. And all of those listings have pretty much gone over asking, except for maybe one, I think.
you
Uh,
know what? Just quickly to touch on that before I forget, they all have sold, I think, uniformly November and December for at least 10% above asking price.
right. Yeah, and I mean, like that's incredible, and that's unheard of for a lot of listings at this time of year. Um, I just want to make sure the listeners understand what was it, sales to current listings, like what that ratio actually means.
Yeah,
If you want
you
to
want to
explain
explain
that
it?
quick.
Yeah, I can explain it. So, folks, one of the main absorption methods that we use, Denzel and I, in order to calculate what exactly is going on in the market is we want to know as close as possible how many listings are entering the market versus how many properties are being sold. If that ratio gets too low and there's too many properties coming to market per homes that are being sold, that's as close as we can get to a buy versus sell balance. So, what I found anecdotally trading in the market is when this ratio gets significantly above 80%, the market starts to feel very tight. When that ratio drops closer to 50% or lower, it starts to feel like supply is building up and buyers have a lot of options and stuff starts to sit, or at least tends to.
Yeah. So with that information, I think that a lot of other investors probably could draw the conclusion if we're at an 83% sales to current listings ratio in that was in November, Keenan?
That was sorry, I messed up the data. It was 83% in October, but in November it was still 81.5%, which is not horribly different. That's still very high,
Right. So
unreasonably high.
so basically what's happening here is all of the listings that are coming to market, f out of five listings, four of them are getting sold. And I can almost guarantee you, in these areas that that's happening, the one house that is not selling is is either overpriced or it just sucks,
Yeah.
right? Or so some landlord looking to ditch a rental and clearly it's not for the home buyer. So for my flippers out there or who are in the resale market, like this is a good metric to use to know whether or not it's actually a good time to sell. And I've been saying for a couple of years now that December, January, and February are actually great times to sell. I would be against maybe listing like right around Christmas. Like next week would be a little bit wouldn't be the smartest business decision in my opinion. You got Christmas Eve, Christmas Day, Boxing Day, New Year's Eve, New Year's Day, all in the next like 10 days or 2 weeks or so. So for us, what we're looking to do is we're probably listing in, this maybe 2 days after, 3 days after the New Year's Day. People are getting back to work, acclimating to kind of, their New Year's resolutions, getting over their hangovers, blah, 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 blah. And, they're like ready to get into the market and buy. And you guys will see a lot of realtors will be start marketing hard. And you'll see them really trying to encourage buyers out there to act now before the spring frenzy hits. But little do they know is that the supply is likely to be its tightest in January. At least what I found. I remember, me and Keenan were looking at stuff, week 1 and week 2 of January, and it's like the same houses from December, right? And so everyone's like really thirsty for that new inventory.
It's 100% true. And so, just to touch on a few things there, would I advise listing? It's currently December 18th in the very early morning when we're recording this, by the way. But I've had a few conversations with real sellers who are looking to sell properties that they flipped. And the question has been, do we just put this thing on the market right now and just say, hey, bring us an offer as fast as you can, or do we wait till the new year? And I've got probably off the top of my head at least three, if not four properties that are going to enter market in the first 5 days of January, between New Year's Day and January 5th. Um, on the advice of myself, my colleagues, everybody that's involved, we're saying just skip this next section, despite the fact that, as you alluded to earlier, the last 6 weeks have been incredibly good, and
Yeah.
outcomes have been actually exceeding seller expectations in a lot of cases.
Yeah.
Um,
Like I would probably say like yes, last night was probably last night or maybe even the day before that was the last real day you could list in 2025. If you're doing the offer data strategy especially, um, 5 days of marketing, 4 days of marketing, like that's going to take you into what, Monday or Tuesday next week. And we're talking about December 22nd and 23rd.
yeah,
And my partner and I we're talking about it's a blizzard in Winnipeg. We're having an extreme blizzard here in Winnipeg today, and we're talking about going Christmas shopping today.
yeah.
And it's like real estate isn't exactly top of mind for a lot of people. But I guess the other side of that though, Keenan, is that the people that are looking still right now, they're really serious, which is good.
That is true. And that's probably why a lot of these deals that I've been talking about here have gone better than the seller has often expected. And sometimes even better than I expected, if I'm being totally honest. Um, the serious buyers are still serious. They're still out there. And let us not forget that this is amongst the most affordable it's been to be a new buyer in a very long time. And even for the people that locked in their sub 2% interest rates, going from 1.6, 1.7, 1 point whatever into a 3.7 hurts a lot less than going from such a low rate all the way to a 5 or a 6% mortgage. Um, yeah, it's going to be a little more, but ultimately life happens. And usually, if you're going to make a move like that, whether it's an upsize, downsize, side move, whatever, um, the lifestyle benefit outweighs the slightly elevated cost of the debt.
Right.
So I think we're almost entering a renaissance period of people realizing that, hey, this whole sub 2% mortgage thing definitely isn't happening again anytime soon. Um, it's now or never. Like, are we doing it or not? And I think a lot of people have decided, yeah, we're doing it. Interestingly enough. Now,
Yeah. Keenan,
Denzel,
I just want to share something just because this is just kind of like a FYI with regards to mortgage rates.
Mhm.
Because I just got actually an email from one of my mortgage advisors over at my bank, and a 5-year fix for a commercial client right now is 4.19%
Wow.
as a rental landlord. And Their 5-year variable close is 3.65. Um, why is that important? I think that that's something to consider, that there's probably going to be some uh new people entering the market this year. And who knows, I remember looking at this, and my rates were well into the sixes, maybe like a year and a half ago, right?
I
So to see it
remember.
come down 2% is huge. Um, yeah. Sorry to interrupt. I just wanted to share that.
No, that's very valuable. And actually, to speak on a little bit of the new people entering the market, you and I the other day and earlier this morning had just a quick conversation about the inflow of new blood into the real estate world. Um, I've seen it. I've been getting the calls much more often lately. Well, actually, I've been getting two calls lately. I've been getting the very highly scripted. I definitely paid for a course. I'm reading off a paper into the phone, asking you for information on some kind of deal calls a lot more often, which screams new investor. And by the way, if you guys ever do call me with that, I'm not going to make fun of you or anything. I always say the same thing like, okay, put the script down, just talk to me. Like, just talk. Like, I don't want to know what your coach said to say. Like, just talk to me and I'll help you. Like, very simple. I don't want to talk to a piece of paper. Right.
Right.
And the other call that I get is, hey, bro, you got any deals? I'm pretty sure I'm the only one shopping right now, but do you got any deals? And it's like, man, I've got that call 10 times in the last week. Like, you're not the only one shopping. Everybody is shopping,
Yeah.
and for good reason. But, like, supply is tight. The wholesale deals I've seen are as bad as they've been. Like, I saw a wholesale last week that had a spread of probably 50K after the fee. It was like almost a 360 buy on a probably 400 to 410 ARV. And I looked at the thing and I went, what? Like, just list it. Like, are you kidding me?
Yeah.
But like, this is the state of the market. I don't know what to say, but I don't know, Denzel. What do you think about all this?
Well, I look at it and I go, okay, supply's tight. And all I can say is that, with all of the connections that I've made and kind of the things that I've learned over the past 2 years, and some of the things that we've discovered recently, um, deal flow isn't exactly like my biggest bottleneck in my own business personally.
Mm-hmm.
Uh, but but I could also say this is where, if people are looking to scale and they take things the wrong way and become too aggressive at this point in time, is when they make mistakes, right? So,
Mm-hmm.
be careful out there. Make sure you hire Keenan Brown, and uh, yeah, just make sure that you're not being too eager to buy right now, because when the market gets tight like this, and COVID was a time where, like, it was tight for an extended period of time, right?
Yeah.
Like, your buy window, like, don't get me wrong, I'm sure there's still deals on the MLS right now. You just gotta get the inside scoop on some of these listings, right? But just don't be in a rush. It'll come when it comes, if you're doing the work and being persistent, right? Um, yeah,
And that's a good point to note. Like, if you just scan the MLS and look at every single listing, there's maybe going to be between 5 and 10 properties that are of material interest. And then of those 5 or 10, the list price is probably too high.
yeah,
But if you make some calls, you could very quickly realize that this seller's actually in huge trouble and they take whatever it needs to be at.
yeah,
And that's how deals happen. But you got to try and you got to know who to talk to and you got to know how to ask it, because you can't just show up and write unsolicited sight unseen offers on stuff. You got to put a little bit of effort in, but it can make deals happen. And
yeah,
even this month, we did have somebody from our group have a very reasonable buy off of the MLS. It wasn't a blowout or like a AAA deal, but yeah, certainly a profitable deal. And
yeah,
like, that can happen. You got to show up. And that's the biggest thing about this time of year is everybody thinks they're the only buyer, and that's simply not true. Um,
yeah,
Not in the investment side, not in the home buyer side, not in any facet of this whatsoever. Not even the multifamily side. I know that's been picking up a lot of interest over the last few years. A lot of you are into multifamily now. yeah, you're definitely not the only multifamily buyer. Like, believe me, there are so many people. It's I don't know if you kind of know this analogy, but a lot of the multifamily guys like to call and they just want to talk about the deal, like not in terms of what the house is, but in terms of like the creative ways you can get into it. And it almost feels like I'm being I don't want to say exploited because that's the wrong word, but like I'll be talking to them about the nature of the financials of the particular property that I've listed. And they'll be like, oh yeah, I could do a VTB on that. And then if I just extend that for 3 years, then I'm into it for this. And they're like intellectually masturbating to this deal while I'm on the phone with them. And I'm just like listening to them and going like, yeah, dude, you could totally do that. And they're like, yeah, I totally could do that. I'm just sitting there like, or you could, do the CMHC, whatever their, I forget what their product's called, but anyway, you get the point. I get a lot of those calls lately too. Well, no, I don't have multifamily on the market anymore, so those haven't happened in a little while. But when I did, I got that a lot, and
Yeah.
always makes me laugh. The point is,
Yeah.
there's a lot of new investors out there. The home buyers are still out there. There's a lot of people looking to flip. Even the Burr method is getting popular again. Have you
Oh
seen a
yeah,
lot
let's
of
go,
Burr
guys.
guys?
Me and Keenan got a lot of inventory. Hit us up for those bird deals, baby.
Mm-hmm. I remember a couple of years ago, Burr became like a swear word. And
Yeah.
now everybody wants to burr.
Yeah.
It's like it's a new thing. So, Denzel, remember in 2022 we talked about what are we going to do
We
with
don't
these?
remember 2022. What
What's
happened?
that? You forgot. Uh
I'm
oh.
just joking.
The we were saying like, okay, next time this happens again, like what are we going to do differently? Because we learned to recognize these kind of patterns, and now I'm starting to see a significant amount of 2022 like setup in the market where the Burr guys are back, the new investors are out, maybe not in as full of force as they were then, but they are definitely returning. There's a
Yeah.
newfound interest in real estate, multifamily is going off, and there's still significant home buyers with properties, despite the benchmark going down, selling above expectation.
Yeah.
Um, what's your with that in mind? That sets the stage for 2026.
Right.
Uh,
I think what really accentuated the amount of new investors entering the market was the uh amount of coaching, I guess you can call it, available in the Winnipeg market particularly.
mm-hmm,
Some names are, Teammate Real Estate was a company that was doing a lot of teaching. Uh, there was obviously Black Card, which we both know very well, was still heavily involved in the coaching industry here in Winnipeg with real estate. Uh, Go Get It was another company. Like there was a lot of those, and I
mm-hmm,
think that's what really pushed those new investors to, enter the market and buy something and get into the business. And now, with coaching kind of falling off of a cliff, I would say, right when the correction happened, because there was just so many mistakes that were made with these new investors. Uh, I don't know if we'll see that to that extent, an amount of newer investors entering the market, just because there's just not enough. Because let's be honest, there is some specialized information that you require in order to like get into real estate. Like I
yeah,
remember when I was first starting, I was looking at it and I was like, how the heck do you even get into this thing? Like we're talking about hundreds of thousands of dollars. Like how do I come up with that? Like there's just a lot of like mental obstacles that you need to get over
mm-hmm,
um, to even be in a position to buy and take action, right? Um, yeah, being in real estate requires a plethora of skills, right? You need to be able to have some sales ability, marketing, leadership skills, um, a little an understanding of construction and how all the pieces kind of fit together. So it's not the easiest to get into, but sorry, I digress. I do think that going into 2026, we'll see some new investors and that Burr method will come back. As soon as I start to hear that, I start to my eyes start to widen and I start to look really close at like what's really happening because that is a signal for we're reaching the peak or we're starting to get there. Because as soon
Mhm.
as you start to hear people that you have no idea or who should have no business talking about real estate and real estate investing is when you go, huh, open the Substack and start reading what Keenan just wrote because there's a good chance that we're getting pretty close to where the top is and, you know, try to make as much money as you can in this period, right?
That's probably a good way to look at it because, I mean, there's no way to know when this bus will stop. And I think 2026 will be an up year. I think that
Yeah.
the market's going to go higher. I was short on my prediction of 472 this year, but I thought that the rate cuts that we ended up getting in September through to November would have came much earlier. They didn't, and I think that
But
put a
that,
pause on the market.
yeah.
But this year, starting at 433 or probably around there, depending on how December's data turns out, pardon me, I could easily see us hitting a peak back at 472 this year. And I don't think we'll stay there for long. I think it'll be like a one off, or we'll be within a couple thousand of that and then come
Yeah.
back down and taper out. And then from there, it's all to be determined because I don't really know what rates are going to be like at the end of next year. I don't really know what the economic situation is going to be like. But the one thing that I do know for sure is right now in the late season, we already have a supply imbalance in a seller favored direction. And
Yeah.
that does not typically happen in December. Usually it's the opposite. All of the rules that the older generation of realtors talked about in terms of market dynamics in the fourth quarter and early first quarter, I think you can throw most of that out the window in this market. When you've got a late Q4 this strong, it doesn't make any sense to say December is not a good month to sell when the data strongly shows that despite pricing declines, everything is getting taken for a value that arguably could have been a spring price.
Yeah, for sure. And it's
It's
just availability, right? Like, and it's going to be again, it's going to be the same thing in January. And so, um, I'm with you on that. We will 2026 is going to likely be an up. By how much is to be determined. Um, yeah,
there's there's going to be an article about this for those of you listening. I haven't written the article yet. It's on my to-do list, but um, I'll be fully transparent. I've simply been too busy um, actually conducting my job as a realtor to be able to sit down and think about what's going to happen month over month next year. But putting the pieces together and seeing the action that's going on and then getting the calls too, because like one thing that as an agent I get that a lot of investors don't get is I get the friends and family that call me and say, hey, I'm looking to make a move in 2026. I'd like to get started. How can I make this happen? And that's happened a lot in this late season, maybe more so than most years. When I see all of these pieces come together, I don't see a way we're not going to have a squeeze upward in the spring. And I just, I don't know where it'll stop. I don't know how high it'll go. I think we're going up. And I think it's going to be a pretty dramatic and sharp rise in the early stages of the year.
yeah.
Now, as an investor looking to flip property, how do you protect yourself and do well when you know that prices are, or think that prices are going to rise, Denzel? What do you do?
If you have the cash available, whether it's with joint venture partners or you have it on your own, like right now, if you're out there, like buying a deal now, I think you have to kind of you can't be too conservative and use like comps from October and September and say there's no way that thing's going to be a deal, right? Because you're going to have to look at like this past year's spring pricing as a metric or even sales that have happened most recently in like the past 6 weeks uh to draw your ARV. Um, because you could be missing out on some opportunities too, right? Like the
Mm-hmm.
spring ARV in March and April or February, March is far different than July and August and September, right?
I agree. Yeah.
And so, to avoid shooting yourself in the foot and maybe being too conservative, like right now is actually like if you have a deal and there's something available, think hard about it because you might thank yourself, once you take possession, whether that's in January, February, and you sell it into the spring market, right? Like there's a few listings that I have or that are going to be coming this January where I I purposely delayed the start times on these things, knowing that if I wasn't going to be, because I had some possessions in May, right?
Mhm.
And I knew that by the time I was going to be done, I was going to be hitting Canada Day of this past year. And I said that would be a terrible time to list because, prices, while the data might say otherwise, like the inventory levels are far higher than in July and in June than they are in January and February. Like
That
that,
is true. And that pulls us right back to the sales to current ratio,
right.
right? Where a lot of the time, like again, the data is always skewed in January specifically because there's a lot of relisting going on. Like there's a
Yeah.
lot of it expired December 31st, which by the way, just here's a little bit of insider edge for everybody listening. The vast majority of MLS listings will expire on December 31st for the reason being that MLS numbers get reset the following year. So all MLS numbers right now start with 2025. Next year, they will all start with 2026 and then 5 digits.
Mhm.
I have, I think, probably 4 or 5 properties left on the market, and 3 of them have expiration dates on the 31st of December. One of them is going to easily sell before then. Another probably will. 2 or 3 will probably expire. Who knows? Hard to say. Point being is that a lot of the time on December 31st, the question is to the seller, hey, do you want to roll it again? Like, should I flip it back to active? If yes, then it pretty quickly happens, and that really skews the supply. But every other month, it becomes a little bit more uniform. And when you get ratios that are in the 60% range or low 70% range, it certainly feels different than when you're looking at significantly over 80%. And I've got the data in front of me. This will probably be in the next article, by the way. But technically, by absorption, the highest absorption month we had this year was actually October, followed by June, followed by November. July would have been a particularly mediocre to average month. So what Denzel is saying about, oh, do I list on Canada Day? Is that a good time? From an investor's perspective, like, yeah, prices are high, but the uptake was only average. It was a very medium month to list compared to even October or November, which was a high uptake period to list. I hope
Yeah.
that makes sense to you guys listening. But
Yep.
anyway, I wanted to jump in with that because I thought it was good to mention. But your decision to not list on Canada Day, what did you do instead?
Well, we delayed the construction start time because I remember even with you, Keenan, I was kind of going, well, is this the time to be just listing stuff as is in the summertime? And the answer was again, probably not because it was very unclear whether the property would even sell for what we were hoping for, just because there's so much inventory on the market at that time.
Mm,
Right now would be a perfect time to list a flip property as is. You know, Keenan and our team recently was able to find a house in St. James. It needs a lot of work. But that's a property that we could just probably list that thing on the market as is and do pretty well with all things considered, right?
yeah,
Because of the appetite for product is so high, right? So, um, and that's an experience thing that only comes with having the right people in your ear about what is actually going on with the market and some of the decisions, because that sort of thing can cost you a lot of money, right? Like the amount of properties that I've seen come to the market and they look beautiful, they're fully renovated, and then no offers on offer night. And then you go, what happened? And then that's where, when the supply is high, you need a realtor who's going to really know how to nail that pricing. Because if you don't price it right and the people don't go look at your house, like good luck getting it.
Mhm.
right? Good luck trying to get your what you had projected to get. Um, so anyway, uh, how do you protect yourself from making any mistakes in the early parts of the year? Think about where you're buying. The location is important. And then secondly, I would just say make sure that you're drawing your ARVs from the right periods in which you're probably going to sell in, is what I would say.
And that's as good as you could hope for.
Right.
Um, Sometimes there just isn't enough data to be able to play that game too accurately, but just use common sense. And hey, like I give a lot of ARVs. Like I do that research at least a few times a day, and you know, I try to not be the guy that projects an incredibly high value by percent of what's already sold for a time that it's unlikely to go well. I certainly wouldn't be advising people to shoot for the moon in, say, September, which this year, actually, September probably would have been about the worst possible month to list a flip, just for example, by uptake. I wouldn't be saying, like, let's go for a record then. But funny enough, if you wanted to go for a record this year, it's like June would have been great. October or November would have been really good. You would have had pretty good luck in the early season in the spring. Q1, any of those times would have been fine. Pricing was lower then, so maybe that wouldn't have been absolutely the best. But
January and February. Well, I sold stuff in January and February. Like we had a um 2,000 square foot, 1.5 story in Old St. Vital. And this is one where, Keenan's like, I don't know if that's the ARV, man. And I'm like, and it's not very often I go against what Keenan is advising me, but I go, ah, no, I think the ARV is a little bit higher on this one. And sure enough, like, I mean, if you're going to take a risk, it's going to be in January and February when there's nothing available. Because then now you're playing the market, right? It's not, no,
yeah,
it's not necessarily like it didn't sell for that much because of how beautiful it was. I mean, yes, sorry, it probably did, but the price was pretty high for that area for that type of house. Like we're talking 10% higher than what a lot of people thought it was going to get.
yeah. Well, it
Um,
was 10% higher than I thought you were going to get.
and 10%, like that's we're talking 50, 40 grand, right? So
Yeah,
some of these things again, like it just comes down to your experience and what your instincts are. Keenan recently had another listing last night. He goes, I don't even know if we're gonna get um
don't
what
say
my client's
it.
hoping for, right? Sure enough, it does very well. And again, I think that's more of like an instinctual thing from your client where he goes and says, there's just no way that it could be worth less based on what's available here. Because comps are hard sometimes. Like if you get a unicorn and you're like, like I don't even know, like there's nothing like this in this area, so what's it worth? And then
Mhm.
now you have to really start to look deep at like and put your best effort to just try to compare areas almost, right? So your job's not easy,
No, it's a fine line between an art and a science, right?
right?
And ultimately, the investor is the one that's walked the property and seen the house and made the plans and has the idea as to what they're going to turn it into. I have to basically take an abstract idea of what a house is with numbers on a sheet, think about what other houses kind of like that, or even sometimes not like that at all, have sold for, and understand what someone would likely pay for this hypothetical place that I've never been or seen.
Yeah.
And an that's not just a simple like, oh yeah, I totally know. Now, if we're talking about like a bungalow in Windsor Park where that's the whole area, they're all the same thing. Do they have a garage? Do they have two bedrooms or three? Like, is it on a bay off bay? Is it on a busy street? Like, that's a little easier, and you can kind of figure that out because it's very understandable. But when you get those corner case properties, there can be big skew one way or the other. And I've found often the more unique a property is, the harder it's going to be to sell because odds are buyers aren't going to go looking for it. They're going to stumble upon it and go, hey, that's actually cool.
Yeah.
You know? People rarely go out looking for a house like the one that you described, but
Yeah.
you can get some really lopsided outcomes. Like in 5C 2 weeks ago, we had a $400,000 sale for a 1930s build with no garage.
Yeah.
With no garage. Like
Yeah.
it's
You know what though?
yeah,
Like I think for a lot of this is for my flippers out there. There's a few things that need to be really looked at when you do get these, unique properties. The first thing that a lot of buyers are looking for and other agents will advise their clients about is the layout.
yeah,
Like the layout really needs you need like if you're buying a unicorn and maybe it's got a way larger square footage than a large majority of the comparables out there, you have to really take a look and say, does this house even flow the right way? Right? Like does this have a desirable layout? And then if it does, then you might have something on your hands. And then the second thing goes, okay, where is this located even in this particular area? Is it on a busy street? Is it on a quiet street? Is it in a bay location? Right? Um, all of those things come into a buyer's mind when you're going through it. Because I've made some mistakes buying houses for the right price, but the layout sucks. Like we did pretty well when we were in the midst of chaos in middle of 2022, Keenan, when we were selling some stuff. And I think a lot of it had to do with a lot of the houses that were a little bit more challenging to sell was due to the layouts. Like we had a house on Hartford that had a shorter ceiling in the uh, three-quarter story, and so I know for sure that was probably a deterrent to some buyers. And not to mention that basement was like scary, right? Um, Another one was we had another property on Collegiate, beautiful renovation, don't get me wrong, but it was a 1900s 1.5 story, and thankfully that layout and it had a really nice living room that kind of flowed nicely, but it also had a skinny staircase going up the stairs, I remember. And then there was just like some weird stuff about these houses. So, just keep that in mind. You go buy a house in Wolseley and you're like, wow, this is going to be I'm gonna knock this out of the park. Like just remember that layout is huge, 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 huge. And if your house doesn't really have that flow and you feel like it's a little too compartmentalized, like it's going to be a problem, right?
no, it's 100% true, and that's one of the common factors in all of that is those were all older homes,
Yeah,
like way, way, way before 1940. But even to some extent, there's some 40s builds that have some oddness about them. But that's
that's
why a
right.
lot of the flipping coaches these days they advise stick with mid-century or later. But
Yeah,
the problem with that advice is like it sounds great, like, oh yeah, easy enough, I'll just buy 50s and after, until you realize that the multiples you have to pay for those kind of houses are often uninvestable or so borderline that there's not necessarily a high likelihood you're going to make anything by the time you're done, especially if it's deal flow that can come to a beginner where um, there may be like a C tier buyer because they're not a big player, they're not as well connected, they probably don't have all cash and probably can't close on a lightning timeline. It's the guys that are as described that often end up in those deals because they put themselves first in line by virtue of what they have and their connections. And
yeah,
and like, look, as a realtor, I don't control every deal, obviously, but I control some. And when I do, am I going to work with the person that just randomly called me for the first time or one of the however many guys that I know have cash, have experience, can close quickly, know what they're doing? I don't need to educate them. I can just tell them, here's the deal. This is what it is. They know what they're buying. They know what they're looking at. There's no questions to be asked. They just do it and it's over. And my life is easy and so's theirs. It's not that hard to explain. Like if which is too bad, but that's just the way things work. And I don't make the rules. I just play the game.
we need that on a poster, man, in your
I don't
office.
I don't make the rules. I just play the game. Substack will probably clip
That
that
was a
section.
bar,
So
Keenan. That was a bar.
yeah,
But I'm not a rapper though.
no, it's good. Hopefully that ends up in the plates. We'll see what we can do about that because that's pretty fun
Uh,
to to go through. But anyway, so as a rookie investor, don't take that as a huge discouraging sign. What you need to take that as is you might need to get some reputation built up by doing a few of these deals. Like, don't go and buy something for the sake of buying something. But I think for a lot of first timers, or like first five timers, let's call it that. Like, once you've got five deals under your belt, you probably have done enough of this to know exactly what's going on. You've handled most of the big problems that you're going to have to handle.
Yeah.
However, as you're building towards that, you're probably going to need to buy some weird stuff and learn some lessons.
Yeah.
Why don't you build a little bit of a base of understanding by doing some of those first? That would
Yeah.
be my suggestion. Fair enough.
100%.
So that kind of covers the majority of, I guess, our predictions for market talk in 2026, I
So
suppose.
so
But
Keenan, I guess
yeah,
sorry.
yeah, yeah.
So what exactly is your prediction for next year? I know that we talked about up, but I don't, are we getting specific right now, or are we going to wait till January to say like what we're going to be at this coming year?
Okay, so like if I had to be put on the spot, I'm just going to say I'm going to re-roll my prediction from last year that we fell short of. I
Hmm.
still think we're going to get to 472 or very, very close to it in 2026. I think that that peak will probably happen most likely in May. I
Hmm.
think.
Hmm.
I am going to imagine the first 3 months of the year are going to be a very aggressive and sharp pricing hike upward. I think that the most aggressive moves are going to be in February and March. I think that April and May will be slower, but still up. By summer, I'm imagining a approximate plateau slash decline. I'm expecting fall and winter, unless there's some rate driven thing going on, will probably decline more than we saw either this current year or last year, which just so you guys who maybe weren't watching in 2024, remember in probably the last, I'm going to say 6 or so months of 2024, the benchmark price basically didn't change. Like from June to December, we went from 420,700 to 414 even. It was like the most boring benchmark price updates imaginable because we were moving a grand a month. It was like, yeah, it's flat again. Like, there you go. I don't think that's going to happen in 2026. I think we're going to have a sharp move up, and it is going to come back down in a much more dramatic fashion than we've seen since probably 2023. If I had to be put on the spot, what do you think about that?
Like I think we had some off-camera conversations, and I think you and I share the same perspective with regards like what's going to happen in the next few months here. And it's kind of been the same story. Like as long as Winnipeg has this supply issue, which is a result of obviously COVID and things like that, as long as we have the supply issue, like I wouldn't be we need some sort of new black swan event to occur for a buyer's like for this to flip into like a extended buyer's market kind of era, right? Like
Yeah,
we need something where there's a massive supply of homes that hit the market and just not enough buyers because maybe they're afraid to buy or who knows what the reason's going to be. Like that's what needs to happen, right? Like COVID took a lot of the, product off the shelf because now people didn't want the people in the houses. That's what happened, right? It's like,
yeah.
okay, COVID's here. Don't want anyone in my house. Everyone duck and run because duck and run and take cover because like there's something out there that we have no idea what it is and how dangerous this could be, right?
People just refused to list.
Exactly.
That was the
So
problem. People refused to list, but everyone wanted to buy.
and so if we have these months where, December, January, February, March, April, May, June, 7 months of the year where your sales to current listings ratios are above 80 in almost every month, that leaves us one house every month that carries over into the next month. That
Over a
probably
lot
gets
of
price
markets, yeah.
adjusted and then finally sells,
Hmm.
right? Like, yeah, this could be the story for the next couple of years. I don't know, but I mean, it's good for anyone who's thinking about flipping a house or trying to get into the market and doing just one. It might not be a bad time because when the buyer market hits, Keenan and I are going to be all over that. Like
Yeah,
it'll
it's
be like a
tricky.
breaking news, this just in, kind of like, you know, watch out, be careful out there kind of thing. And I'm just happy that because of this podcast, a lot of you guys can be prepared for that, like, and could be prepared for that. Um, because I didn't have me and Keenan when I first started, and it was like running in the dark, right? But now, at least with this podcast, um, hopefully a lot of you listeners can get a lot of value in some direction here from people that are actually doing stuff in the market right now.
And that's been the goal from day one, is just to, provide people a little bit of information to help understand exactly what's going on. Because I've always found, and you know this, Denzel, that the real estate coaching community was always kind of preaching the same message, which was it's never enough, more leverage, more debt, like go big or go home. And sometimes there needs to be a moment to stop and go, well, wait a second. Like, let's show some restraint and some responsibility here, because it's not just going to be the same way forever. And go figure, a lot of the people that were kind of playing that game didn't really have a very good time over the last 2 or 3 years. In fact, a lot of them are out of the industry entirely. And the cool thing about real estate is it's something you can do your whole life. Whether that's a good thing or a bad thing, I'll let you guys decide. But you are never forced to stop because of your age. So, especially if you're a younger person right now, you may as well set yourself up for multiple decades of enjoyment, wealth, prosperity, and experience in this industry, rather than trying to catapult to the finish line and then immediately stop and retire off of your passive income, all 1% of your post mortgage costs that you pretend is actually income, but in reality should have been a part of your maintenance budget, isn't really a way to, you know, live your life. So do good deals, be smart, and be careful. I think that's a very reasonable thing to say, but that would have been very controversial to say in 2019, 20, 21, whatever. But you know, different world. So
Yeah.
yeah, that's really that's the gist. But Denzel, if you had to get really specific, what do you think is going to happen next year in terms of pricing and in terms of, action by quarter or month or however you want to break it down?
So you were at 472.
Yeah,
Well, I'm a more optimistic person than Keenan sometimes. And so I'm gonna go and say that we're at 433 right now.
we're at 433 in
I'm gonna
November.
say 480.
480. Okay. That's very possible, I will say. I
It's
don't know
slightly
if it
higher than yours, but if I look at the chart and I go, well, if the high was where were we at? Sorry, let me just pull the Substack up again here.
the high for 2025 was 451 800.
Okay, so we went up 30,
Yeah.
451. But then from
Well,
June,
basically, effectively 10% was just under 10% from December to June was where we got.
I mean, yeah, I guess we'll see. That's going to be something. If we touch 480 next year, I mean, not saying that it's going to happen, but the fact that the benchmark price could almost be $500,000 in Winnipeg is just mind-boggling, isn't it?
It is,
Like,
but
yeah, let me buy this 1,000 square foot bungalow in Tyndall Park and it's 500 grand. But I guess, you know what? People are paying that in Garden City now. Like I can't even Maples, Garden City. Like I was just talking to I coach basketball and I was talking to one of the parents and, like we just real estate is a topic that's, just it's housing, right? So people casually discuss these things with me sometimes knowing what my career is and they'll just go, "Oh yeah, I saw a listing out in this area and it like went for this much." And I go, "What? Really?" And it's just $500,000 is just what was it, 5 years ago? I'm looking at the benchmark price 5 years ago, and we're talking about 3099 for that same house.
it's really mind-boggling. And people forget, right? Like this past 6 weeks, like I've had a lot of nice bungalows, buy levels, like really conventional, like standard family homes on market selling for 450 and more over and over and over again. And it's the crazy thing is like the people that aren't buying them are still competitive. It's not like these are one offs and crazy people doing God knows what. It's like, no, these are very desirable homes that a lot of people clearly want to own and are willing to pay real money for. Um, Wild when you think about it.
Yeah, absolutely.
But okay, well, that's almost our hour cap here, and I know that we both have a full day of business to go on to. We're recording this on a weekday, which is not typically what Denzel and I do. We usually save it for the weekend, but just with the holidays and everything coming up, we wanted to make sure that we weren't going to be late on delivering this episode. So we uh we did what we could to get this to you guys as fast as we can. I want to say thank you to everybody who's been listening, especially since the beginning. We're very thankful for all of you. And if you're new here, make sure you subscribe and make sure you say hi. We love to talk with our listeners post episode. I know there's a bunch of you that like to call me after you listen to one and just ask questions or have a little bit more conversation about something that got discussed. And I very, very openly welcome that. So please feel encouraged to do so. And for the rest of you guys, I wish you all the best in 2026. And any closing thoughts, Denzel, or anything to add?
Nope, this time, yeah, good luck out there for those of you who are entering the market. If you have any questions, for sure you can send me a DM on Instagram and I'll get back to you as soon as I can. I know that I've missed some messages, but I do reply. And yeah, I think it's going to be an exciting year.
I do too. So, with that being said, guys, we will be in touch. We will see you in 2026. And thanks again for listening.